You can decide to invest where you want to invest, regardless of where you live. Just because you live in a place doesn't mean it's the best place to invest. You can find property on your own and figure out a way to operate it. You can find people that have investment opportunities like myself that do all the work of identifying the market and operating so that you collect those paychecks. Completely up to you. But I want to encourage you to really dive deep into market research because it can make such a big difference in real estate investing. And I want you all to be savvy, hands off real estate investors or hands on, whatever you want to do.
Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Sylvis, ready to unlock the keys to a life of true abundance. We're diving into everything from financial freedom and optimal health to meaningful relationships, geographic freedom, and everything in between. It's about creating a life rich in experiences, purpose, and joy. Get ready for empowering conversations, expert insights, and real-life stories that inspire you to live abundantly. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
Secrets to Abundant Living podcast community. Hello, and welcome to season 2. It's our first individual episode for season 2, and it's also 2025. And I'm just so excited to be here with you all. I hope you are doing great. I know there's a lot going on, and I'm trying really hard to make this podcast something you can turn to for information, for things that are thought-provoking, and all the good things. So as a reminder, my name is Amy Sylvis. I am the founder and principal of Sylvis Capital. We have over $344 million in assets under management for apartment complexes and flex industrial across the United States, over 2,000 apartment units, 208,000 square feet of flex industrial. And our job is to connect investors to exciting hands-off real estate investment opportunities. So this podcast, though, is about abundance. And just as a reminder, abundance is whatever you define it as. But very often, in order to have control over our time, our geographic location, the freedom of association to be around the people that we want to give, to have overflow, to be able to help others, having hands-off income can be a powerful vehicle to create other types of abundance in our life. So these solo episodes, we're talking about that vehicle, that financial abundance vehicle, that hands-off vehicle. And I want to give you a little bit of how the sausage is made in terms of market research. If you are a real estate investor or want to become one, if you're seasoned, if you're brand new, this episode will be valuable to you. I have made it no secret that I live in Los Angeles. I do not invest in California. I have no desire to invest here. My husband and I don't even own a home here, not because we can't afford it, but because we don't want to buy real estate here. We just don't. Our investments pay for the rent that we pay. So a little bit of a different or alternative way of doing things, but it works for us. But we invest in amazing states like Oklahoma and Texas and Alabama and Kansas, Indiana, Georgia, Tennessee. And as a Californian, I can't tell you the number of people that tell me that they're buying here or they own here. And I just cringe. Not investment advice. I don't tell people what to do, but I am going to tell you what my reaction is, which is why? Why are you doing this to yourself? And I get it. They live here. They think that that's their only ability to invest in real estate is to do something that's local. Guys, it is February 21st, 2025 when I'm recording this. The County of Los Angeles has instituted another eviction moratorium. What? You heard of eviction moratoriums, right? During COVID? It's 2025. And those are back for LA County, which includes the city of LA. Look, we had fires. And we want to take care of people. There are people that are without homes because their homes burned down. Very, very important to make sure that we care for people. The way we care for people should not fall on the backs of apartment owners in this city. This is why we have city, county, state, and federal government resources, lots of money, lots of ability to do that. This should not be shouldered on apartment owners. The woman who cuts my hair and her husband also cuts hair, they're apartment owners. They're not wildly wealthy beyond words, and they own in LA. Should they be responsible for shouldering housing for people who have undergone fire struggles, damages? No, that's not. Yo, what are we paying taxes for? You could, if you're watching me on video, you probably see my face already getting red. This is insanity. That's not fair. And I'm not trying to call anyone out that invests in LA. I understand why. A lot of people haven't even heard of investing alongside people like me in other markets. But it just makes me so devastated that good, hardworking, average people are tasked with this when we have abundant resources. I think California is the 7th largest economy in the world. Don't tell me that we don't have the resources to take care of people, and suddenly my immigrant hair lady needs to have this on her shoulders. It doesn't make sense. So I want to teach you all how to do market research if you're going to buy outside, or if you want to find the best markets in the United States. I'm going to show you the tools that I use, most of them free. We're going to show you 5 today that you can easily use that are proven to help identify some of the best markets in the United States to invest in when it comes to apartments. So I hope you're ready. If you're not watching on Spotify or YouTube, you might want to head over to one of those sites to watch the video, because I'm going to show you, I'm going to share my screen. I'm going to share some of these resources. But if you're just listening on audio, I'll do my best to describe these resources. But hey, the theme is live where you want, invest where it makes sense, right? I'm not telling you what to do, but this is my mantra. And as such, so you don't have to just throw a dart at a map and figure out where you should invest, I want to show you some data-driven information that is often correlated to real estate investments performing well. Are you ready? All right, we're going to share our screen here, and we're going to start off. I'm just going to walk you through these metrics, these ways to evaluate opportunities to find great markets in the United States. The first one is population growth. It's probably no surprise to you all that the more people that move into an area, very likely there's going to be more demand for real estate, whether it's apartments, whether it's office, whether it's retail, whether it's anything real estate related. So my first thing to teach you all about market research is population growth. And how do we find population growth? It is a free and easy Google search. For this exercise, we're going to be talking about the market of Huntsville, Alabama. If you're not familiar with Huntsville, I actually own several hundred units in that market. It is a great market, but I'm just using it as an example so you can see how we might be able to examine that market. So do a quick Google search. As you see here, I've gone to Google. I've just typed in Huntsville population. And what we see here is a nice graph made by Google that has data from the US Census Bureau. So very often you're going to find data up until the end of 2023. So 2024's data will probably come out later here in 25. What I want you to do is I want you to calculate the past 10 years of population growth. So you can see here in 2013, Huntsville's population was 186,000. And then we look at 2023, the population is 225,000, maybe 226,000 if you round up. That is an increase over 10 years of 22%. Is that good? Is that bad? How do you know? How do you know if that's incredible? How do you know if that's not so great? We're going to put this into context. And so what we're going to do is we're going to compare this to the overall United States population growth. So what I have now on my screen, for those who are not watching on video, I just pulled up Google and typed United States population. And we're getting a larger view, meaning all the way back to the 1930s. That's not what we need, but we can still hover our mouse over this data and the graph and get this information. So this data happens to go all the way to 2024, but we want to compare apples to apples. So we're going to look at 2013 United States population, which was 316 million. Okay. Then we're going to look at 2023 population, which is 335 million. For all those math wizards, I calculated ahead of time because I didn't want you guys to have to watch me play with my calculator. That's a 6% increase. That is a 6% increase in population of the United States over the past 10 years. So what we want to do is the market that we're looking at, we're going to compare that to the overall United States population growth and figure out, is it above, is it below? Obviously, 21% for Huntsville, Alabama is significantly higher, almost 4 times higher, 3.5, give or take, than the United States 6% population growth over the past 10 years. Good sign? Absolutely. Let's give that a thumbs up. Now, you can take this easy Google search and do it for any market that you're interested in. Maybe you are investing where you happen to live. Maybe that's fine. Maybe like me in LA, that's not great, but you can still examine that and use that metric. Cool, right? Okay, here's another metric that's great. It's the unemployment rate. Because how are our tenants, whether they're people, whether they're businesses, how are they paying their rent? Very often from their jobs. So how do we figure out if jobs are going well in a market? Well, we can just Google unemployment rate, for example, Huntsville, Alabama. I love the St. Louis Fed. They do a really, really nice job of graphically representing this. Let me go back just a little bit so you guys see. So I just put into Google Huntsville unemployment rate. Several posts or several responses came up. I like to scroll down to find where it says the St. Louis Federal Reserve. I just know from experience that they have a great graph. So we're going to click there. And what pops up is a beautiful graph of unemployment rates in Huntsville, Alabama, all the way back to the 90s. That trend is important. It's great to see what's been happening over the past several years for unemployment. I'm going to click on the graph, and instead of going back to the 90s, I don't need that big of a view. I'm going to look at the past 5 years. How did this market recover from COVID? Did it recover quickly? Did it have a very slow recovery? Well, in this case with Huntsville, very nice recovery. We see maybe a nadir in January through July of 23. Little bit of an uptick, just ever so slightly over the past maybe 6 months or so. But the bottom line is, and we can hover over each month of the year all the way back to COVID to see what the unemployment rate is. But y'all, December 2024, unemployment rate 2.7%. Okay. Again, we're going to do the same thing that we did with population growth. We're going to hunt on over to Google again, and we're going to type in United States unemployment rate. Because again, we want to compare how's this market doing compared to the rest of the United States. Again, this data goes all the way back to the 50s. Thank you so much, St. Louis Federal Reserve. But we really only need the past 5 years just as a visual. I mean, we're investing in the US, so like it or not, here we are. But you can either hover your mouse or you can look here. But if we hover our mouse, we see, to compare apples to apples, December 2024, the unemployment rate in the United States was 4.1%. So once again, we compare the two. Is 2.7 better than 4.1? Yes. So once again, Huntsville, great news. Huntsville, Alabama has a lower unemployment rate than the national average, which is outstanding. Hey, we can get into all sorts of tinfoil hat stuff about how unemployment has been calculated and reported. It's the same across the US, so we're just comparing. We're not looking for absolutes. We just want to know how that's all going there. You all tracking? I think this is fun. I love market research. Okay, so those are our two data points so far: population growth and unemployment rate. Have you ever thought about having multiple streams of income? Instead of relying on just one stream of income where you're trading your time for money, how would you like to free up more of your time and live a more abundant life? As a listener of the show, you're invited to attend one of our upcoming trainings, where I'll give you an inside look into how you can add passive income and get all the other perks of recession-resistant real estate investing without the headaches of being a landlord. I'll also be sharing some hidden mistakes to avoid and the criteria I personally look for when evaluating potential investment opportunities. To reserve your seat for free, go to sylviscapital.com/webinar. Again, that special link to reserve your seat for free is sylviscapital.com/webinar. I look forward to seeing you on the training. And now back to the show. Okay, let's head over to another website called datausa.io. Another important metric for us to look at is the employment base of a given market, meaning what are the types of jobs and industries that our residents are likely to have? Obviously, this is at a market level, so there are going to be various pockets of employment throughout a given market. But as we're analyzing a market as a whole, really important for me to understand what industries are employing our potential residents. So a couple things to look out for. One is, how recession resistant are these industries? Are they quite cyclical? Do they tank anytime the economy gets bad? I don't anticipate the economy to get really bad, but I think we're seeing some signs of recession. So I really want to be mindful on how recession resistant is the market. So again, we're using Huntsville, Alabama, and we're going to datausa.io, and we're scrolling down to the economy section that shows industries. And if there's this beautiful, colorful set of boxes, if you will, for those who aren't watching on video, that shows the different employment sectors. So for Huntsville, we see manufacturing. So we know this about Huntsville, right? We know there's some great auto manufacturing. We see professional, scientific, and technical services. We know that NASA is located in the Huntsville area. There's some research and development in science in the area, healthcare and social assistance, educational services, retail, public administration. In my opinion, from my experience and my work, these are quite strong industries that can be recession resistant, maybe not retail trade, but definitely certain sectors of manufacturing. I'd want to dig deeper into specifically what type of manufacturing, but professional, scientific, technical services, healthcare and administration, education tend to be decently recession resistant. Not 100%, nothing ever is. So that's the first thing that I look at on this website. And the second is there a diverse base? It's one thing to have everybody in healthcare all the time, everything in healthcare, the whole economy is based on healthcare. Yes, that's recession resistant, but what if something does happen to that industry? Is everyone in the entire economy going to be adversely impacted? Or are there different industries that if one happens to falter, there are others that can still support renters earning money and paying their rent? So this is a nice visual representation as well that, yes, Huntsville has a diverse economic base, a diverse amount of industries and the economy isn't solely reliant on a single industry. We like this. I'm going to show you in contrast. We're going to do the same thing on datausa.io for Las Vegas, Nevada. Who wants to guess what's going on there? There's quite a bit of a combination in food services, art, entertainment, recreation. Hey, it's not the Las Vegas economy isn't completely just casinos, but there's a lot of tourism. There's a lot of entertainment. There's a lot of food. These are not recession resistant industries. I'm not saying Vegas is a bad place to invest. I'm not saying Huntsville is a great place to invest. I'm just giving you a preview on what I think through when I'm choosing a market to invest in, as I, again, try to mitigate risk. Investing has risk. So how can we mitigate that? For me, my portfolio, what I've been able to do in real estate, I'm choosing a market where that particular city has recession resistant industries and a broad economic base. So datausa.io does a great job of that as well. You ready for the next one? I love this. Crime. Crime is another metric. Again, I'm sure where you live, look, it can be highly regional, block by block, area by area. But still, we want to know and get a general idea of, is this market a place where there's a lot of crime or not a lot of crime? And what are the trends? So, one website, again, all of this is free for you all to check out, is city-data.com. City-data.com. It's not a pretty website, y'all. It just isn't. It's pretty chaotic, but it does have a nice, again, this is just an overview. This isn't the extent of all of the research you're ever going to do when you research a market. I'm giving you kind of some initial 30,000-foot view to eliminate or say, this is a market I'd like to dive deeper into. This ugly website, if you scroll down, has a nice visualization of crime in a market. So if you're not looking here on video, what I'm showing is a chart that goes from 2009 to 2022. Yes, it's not fully updated, but that's how this data works. Not everything's available in perfectly real time. And it breaks down murders, rapes, robberies, assaults, burglaries, thefts, auto thefts, arson, and the entire crime index. So what I'm looking for first is this crime index in the latest data. What's the overall number? Is it high? Is it low? Generally, the crime index, anything below 500 is good. We'd like it to be as close to 0 as possible. For Huntsville, it's 156. This is good. This is a good sign. Again, not a deep dive. This isn't a block by block analysis of a particular property, but it is an overall view of the market. The second thing I like to look at is, what's the trend? What's been going on in the city lately? Is crime trending up? Is crime trending down? Let's take a look. Well, 2009, the crime index was 479. 2012, 499. 2015, 468. 2019, 225. 2020, 176. 2021, 10. 2022, 156. I like the trend. Is the trend perfectly downward in a perfect slope? Nope, there are going to be bumps. There's always caveats with data, but the overall trend is crime has been trending down in Huntsville, and the absolute number is good as well. This is a good sign for me as an investor. I want to compare and contrast. We're going to look at Memphis, Tennessee. Same data set, same time horizon. So we're looking at 2019 all the way to 2022. What is the city-data.com crime index? 1,022. That's high. That's quite a bit higher than 500, isn't it? It's double. This would give me tremendous pause. What would also give me tremendous pause is that in 2019, the index was 832. In 2020, the index was 907. 2021, 908. 2022, 1022. I know it's a lot of numbers, but if you're looking, you can see what I'm saying. This is a trend up. This is very clearly a trend up. All the way back to 2013, over 10 years, there's been a steady drumbeat of increase in crime in Memphis. This would give me tremendous pause. Would it completely rule out Memphis for me? No. There may be areas that are perfectly fine, but higher crime is going to prevent job growth. It's going to prevent population inflow. Not great. Not a great sign. Okay. Well, our final and last metric is the Milken Institute's best performing cities. Another free resource that's published every year. What I love about this is it really takes a lot of meaningful metrics that correlate to great real estate investing into account. So again, this is a PDF you can download on the Milken Institute's website. This was just updated a month ago. I'm going to show you how I use this. Again, I know we don't have infinite time here on the podcast, but I want to give you a nice visual of this. So the Milken Institute, there's going to be a little bit of whiplash here with me scrolling, but I do want to show you that this has the best cities. Now I'll tell you how they come up with this because it's important. Like best, oh my gosh, it's the best. According to who? According to what data? But first off, they stratify cities by large cities and smaller cities. We can talk another time whether it's better to invest in larger or smaller, but these are the top tier large cities according to them. For those who are not looking visually, we've got Raleigh, we've got Ogden, Utah, Salt Lake City, and number 4, we have Huntsville, Alabama, followed by Colorado Springs, Austin, Fayetteville, and the list goes on and on. What I love is not just the absolute rank, but understanding the change. So it has the 2025 rank, and then it has the 2024 rank, and it has the change. So for Huntsville, for example, the rank is 4, higher, lower number, the better, right? You want to be number 1. 4 in 2025, 16 in 2024. That's a change of 12. That matters more to me than the absolute number. And I'll tell you why, because we're going to go over the metrics. So it's a nice momentum, right? Nice movement there in terms of that change. So it gives a bit of detail that it goes into tier 1 small cities. So some other cities that you can take a look at if you're interested in smaller areas to invest in the United States. So thankfully and mercifully on page 6, there is data that helps you understand how they came up with these rankings. Labor market performance, including wage growth, including job growth. We're already taking some of that into account in some of the other research, right? But this is a coming together, amassing the data, putting it together for your consumption. There's access to economic opportunities, households with broadband, community resilience, income inequality data. Fascinating. High-tech impact, number of high-tech industries, high-tech GDP growth. So interesting metrics that they've got going on here. Again, they selected them, but most of these metrics, I would argue, correlate with a strong economic environment for us as savvy real estate investors to take a look at. What's the main chart, though, that I look at here? I gave you a little bit of a preview, and forgive me for scrolling fast if you're watching this on video. We're almost there. We're almost there. I'm scrolling quickly. Here it is. I want to know the biggest gains. I want to know who is moving and shaking over the past year. So again, this chart is for the largest cities first. It shows 2025 rank and 2024 rank and the absolute change. Number 1, Tulsa, Oklahoma. I just bought with my investors an over 200 unit complex there at the end of 24. Love seeing that. Second, Oklahoma City, change of 86. Beautiful. We've also got Virginia Beach, Fayetteville, North Carolina, and Merced, California. So again, there's quite a bit of information here that you can dive into of why the change, what's been going on. The Milken Institute gives great data. And then, of course, there's the small city ranks. And then just for fun, we can look at the biggest drops. Places I wouldn't necessarily want to invest, but again, nuance, right? San Francisco, Atlantic City, Ann Arbor for large cities, Elkhart, Goshen, Columbus, Indiana, Albany, Oregon. Neat, right? Well, those are my top 5. My top 5 for you all to take a look at as you do market research. I appreciate you indulging me in my rant about investing in California or eviction moratoriums. I'm still floored. This has been going on. But the good news is you have a choice. You can decide to invest where you want to invest, regardless of where you live. Just because you live in a place doesn't mean it's the best place to invest. You can find property on your own and figure out a way to operate it. You can find people that have investment opportunities like myself that do all the work of identifying the market and operating so that you collect those paychecks. Completely up to you. But I want to encourage you to really dive deep into market research because it can make such a big difference in real estate investing. And I want you all to be savvy, hands-off real estate investors or hands-on, whatever you want to do. All right. Let me know in the comments. Let me know if this was helpful, if this type of content is interesting and helpful to you. I'm always happy to share with you what we do at Sylvis Capital to find great investments and make sure that we're getting the great returns that we're looking for. So if you appreciated this look under the hood, please leave a comment. Let us know your feedback. We want to keep making sure we're providing abundantly useful, see what I did there, content for you. Have an amazing day, and I look forward to talking to you all next week. Bye for now.
Thank you for joining us on another episode of the Secrets to Abundant Living podcast. We hope you found inspiration and valuable insights that will empower you on your journey towards abundance. If you enjoyed today's episode, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us, and it helps others discover the secrets to an abundant life too. Stay connected with us on LinkedIn, Amy Sylvis. Keep striving for your goals, nurturing your relationships, and embracing the adventure that is life. Until next time, we wish you an abundantly fulfilling day.